Sahak, good to have you. I'm nervous, though, about the Fed and what happens to growth throughout the year. We've had this slowdown in PCs, even in cloud, but you say you can buy Micron here despite the chip inventory issues. Why?
Hey, thank you, John. Yes, I mean, we like Micron. We've seen a lot of semis already print last week and this week. We saw Texas Instruments with a good enough number. Lam was fine. KLA Corp, they missed. They spoke about industry capacity. They spoke about weaker memory trends. And then NXP last night, reported their guidance was okay. Auto demand strong or resilient. And they talk about consumer and mobile demand somewhat softer. I think when we think about Micron and where Micron is today, Micron already reduced DRAM and NAND wafer starts to right-size supply not too long ago. We think the deterioration in memory conditions is well understood by the street, and more important to investors will be when the cyclical bottom is established. It's our view here that the industry is just closer to a trough than a peak. We think Micron's positioning.
It feels like, Sahak, though, we're kind of teetering at this moment where we're looking to see if some of these industries are going to sort of stabilize themselves or take another fall down a flight of steps, right? I mean, the PC industry is going through this recalibration of trying to chew through this inventory, and yet data center, even hyperscalers, perhaps seem to be slowing down. As you mentioned, autos, those seem to be strong, as we heard from GM this morning. But does some of this consumer weakness eventually bleed through? You think not. How much does the Fed commentary play into whether investors agree with you this week?
Yeah, John, there's a lot of moving pieces right now in the marketplace, and this has been quite a remarkable January to start. When we think about the Fed and the Fed being in the latter stages of this hiking cycle, it seemingly there is some end in sight. So tomorrow, I think most importantly, or for us, what will be maybe most interesting is, what the Fed says about forward guidance and really whether or not this conversation moves away from a cycle ceiling conversation and towards a cycle length or a cycle duration conversation, which could potentially be a blow or a headwind to some of the markets anticipating second half cuts of maybe some 50 basis points or so. So we'll see what happens, but there's a lot of moving parts. We've seen treasuries trending higher all month. We've seen better inflation numbers for sure. CPI, PPI. Last Friday, the PC deflator was a little bit better, as well as last Friday, University of Michigan, inflation expectations lower. And then this morning, I think somebody just mentioned right before I got on, the employment cost index, ECI, came down a little bit. So the pace of wage growth subsiding. We've seen ISM prices paid come in lower. These should be decent signs for the Fed. But again, we'll see if this conversation moves away from a cycle ceiling conversation and towards duration of this cycle length.